Good afternoon, brothers. Hopefully, you all are having a great day. Welcome to our third of our four-part series of our financial wellness presentation. So we've had certainly a busy day already. I know that IMDP training has happened today and it's just wrapped up, and we had a fantastic community service project in partnership with Walls Memorial this morning. I know many brothers will be hanging out this evening. So quite the busy day for us, but happy to have this event again for you all. We have two fantastic presenters today that I'm excited to introduce you to. And so feel free to answer any questions that you might have throughout the presentation. We want this to be interactive. Make sure that you use the chat boxes that you see. And again, thanks for being here. So with that, we'll go ahead and jump right in. So our two speakers for today will be brothers Michael Horde and brothers Maxfield Bowen. Both are very much experts within this field. What we're going to discuss today, our topic is financial freedom, our only hope. So those that are looking into purchasing a new home, what are the steps that we need to focus on to get there? So understanding your debt to income ratio, how do you pay down some of that debt, how to optimize your credit, and other steps that you need to have in place as you prepare to own a home. So Brother Horde is going to start us off, and then we'll transition over to Brother Bowen. So with that, I'll turn over to Brother Horde.
Thanks. Good afternoon, brother. I think we have some feedback. I'm not sure if two phones are on, but good afternoon, brothers. We're good. First, a little bit about me. I'm Michael Horde. I'm from Chicago originally. Moved here about 6 years ago. I own Horde Law PC, which is primarily a residential real estate law firm here. I've done quite a few areas of law, and I still practice in Chicago as well. My passion after I came here was making sure that we, as a people, try to correct some of the wrongs that were done in the past to us in regards to home ownership. I now understand that home ownership is the first step to wealth. And when I talk to folks all the time, I try to impress upon them the importance of owning a home. So, and I want to thank the brothers for inviting me today to talk. Brother Macon, Brother Hawkins, thanks so much for having me here to assist with this. I really enjoy this. So we're going to start with our first. We're going to get into the slides, and we're going to go through the presentation. Well, on the first one, so just an overview of what I'm going to cover before Maxfield gets started is the historical underpinnings regarding housing, and specifically around African Americans and housing. Current trends. We're going to talk about debt to income ratios, which are required. It's a required piece for getting financing. We can talk about improving your credit and strategies to pay off debt. Next slide, please. So first, I had a little trivia. If a brother could put in the comments, can you tell me what this is? None of the brothers who've seen the slideshow already, just the other brothers on the calls. You can type in what this is. Now I had a gift card. Does that help? Oh, sorry. Would I see the comments? Okay. No brothers put it in there. This is 421 North Albany Street. And that's to be significant for everybody who's a brother who's on a call, because it was the first meeting place of the Social Studies Club before Alpha Phi Alpha was created. If you go to the next slide, and what I found interesting, something I had not checked out before, is the history of whose house was this? Why were they so welcoming to this organization? And I pulled this up, and you'll see here that they're trying to classify it as a historical landmark. And Norman Dennis, he built it in 1869 to 1870. And he was an early African-American resident of Ithaca who was born in New York and worked as a laborer and a mason. And if you guys remember, there was a lot of connection between masonry and our founders. I believe all of the founders but one was Mason. So those connections for Black folks were there even before we started. And he and his wife opened up the house. He was also an employee of Phi Epsilon Fraternity House at Cornell University and an active member of Ithaca's African American community. And in his house, that's where they provided the group, the place for our founders to meet for the social studies group. And I think, and somebody can correct me later, but I think C.C. Peniston was also a part of that before he went and diverged and created Omega Psi Phi later. Which, you know, we forgive him. He's all right. And of course, we eventually evolved into Alpha Phi Alpha fraternity. So I put all of this in here because housing is a great context for how we move forward and how things can change. This brother opened up his home to us so that we can get a start. And I'm sure he built some wealth for his family over time just by having a house. We go to the next slide. And so another thing that I like to do is talk about, impress upon us as alpha men, how important it is for us to make sure folks are getting into housing and understand our historical context and how we move forward, basically. So we think about, this quote right here: "The nation has not yet found peace from its sin." And if we think about history, we had slavery to contend with, where we didn't own in the South. Very few folks own property, and somebody can come and just take your property away if you did own as a Black person. Reconstruction, we were promised land. We didn't get that. That was wiped away by Jim Crow. There were deed restrictions that were in place to keep us from owning homes, especially in certain areas. And then zoning regulations were placed in effect to prevent the selling of homes to African Americans, to limit the number of folks who can come in areas where they saw a boom in African American households. I'd recommend folks read Michelle Alexander's book, The New Jim Crow. It hits on a lot of these points. And The Color of Law also talks about how the government was instrumental in making sure we didn't own homes. And we talk about redlining. Folks are not familiar with redlining. They would draw mortgage lenders in determining whether or not they're going to give a loan to a person, would draw a line on a map where Blacks were and say those are high risk areas. We're not going to loan to anybody in those zones. Now, these mortgage companies, you got to understand, they get backing from the federal government. So it's as if the federal government was acting in discrimination at that time. This happened all the way up. I personally think it still goes on, but it happened all the way up maybe 10, 20 years ago. Then you had steering, you have real estate agents and brokers, and they'll tell people to go to certain areas, and they'll say, oh, that's the Black area. You don't want to go over there. You want to go into this area. Or they'll use code. This is a bad area. And they're not supposed to do this, but a lot of them still do it. Or they'll only show their clients certain properties in certain areas, and depriving those areas where we predominantly live. So you have widespread discrimination in lending, appraising. We can talk about that too, but and real estate agency, as I just discussed. I just want folks to understand the things that were built against us in terms of home ownership. Next slide, please. Okay, and then change, of course, happened over time. You had the Civil Rights Act of 1964, which changed some of this stuff. Fair Housing Act, I don't want to insult anybody's intelligence, so I'm just going to run through them. Fair Housing Act of 1968, the Equal Credit Opportunity Act of 1974, the Community Reinvestment Act of 1977, and Dodd-Frank Wall Street Reform and Consumer Protection Act. So continuously, and every few years or every 10, 20 years, something has to be done to try to protect us from the way that these things have changed to try to keep us out of home ownership. Next slide. And I just wanted to share the levels of home ownership. The breakdown is based on race within the country. There's a huge gap between us and white people in terms of home ownership. And that's the same rate, the rates we see today in terms of that gap is the same rate before the Housing Act was passed 50 years ago, 51 years ago, what have you. And so that's something to be upset about, and it's something to charge somebody who's not owning a home to want to do that. All right, next slide. All right, so debt to income ratio. That's one of the big elements when you're getting financing, and this knocks a lot of people out for financing as well. So the debt to income is, and we call it DTI. You'll hear us throw around DTI. Ratio is the percentage of your gross monthly income that goes to paying your monthly debt payments, and is used by lenders to determine your borrowing risk. I'm not going to dive into policy too much. I just think that a DTI is not a true indicator of risk, and they need to reform it a bit. But that's just one of the standards that they have right now, and they have to use. And I was just reading an article actually yesterday about how most African Americans are paying more Renters, most African American renters are paying more of their income, over 50% of their income for rent in a lot of places. That's a whole nother issue when we talk about income and income equality and all that good stuff. We could go there. But so there are two different types of DTI. You have a front end DTI, which is your mortgage payment as a percentage of your income, and then the back end DTI, that's all of your debt as a percentage of your income. A different standards. So you have FHA loans, which most folks get. A lot of people get FHA loans because you put down a lower percentage. You have to put down 3.5% if you get an FHA loan as opposed to a conventional loan of 20%. But I'll let Max, I don't want to step on Max Field's presentation later. But so they require a DTI of 43% on the back end and 31% on the front end. The Veterans Affairs, and that's another government backed loan, requires a DTI of 41%. And conventional loans vary. They can make it lower, they can make it higher if they want to, because they're not under the government auspices of being insured. So they can kind of do what they want to do with the DTI. Next slide. Okay, improving your credit. The metric that lenders use is a FICO score. So it's not the score that you see on Credit Karma, or if you go to your credit report in particular, that's not the same score they're using. They're using different elements, and it's a whole separate company, Fair Isaac Corporation. Don't ask me who they are. Don't ask me who owns it, who sits on the board. I have no idea, but that's who determine, based on all of your credit data, what your credit score for lending is. And that's what lenders will use. And what you want to do when you're talking about your credit report, you want to correct and resolve all negative data. And the three credit bureaus are Equifax, Experian, and TransUnion. The data is pulled from there to establish your FICO score. And if you want to go to figure out what your credit report is, you should check your credit report every year. I think I check mine every week or so on Credit Karma, KARMA, if anybody wanted to download that app to see what your credit report says. But you have the right to get a free credit report each year from annualcreditreport.com. And when you go on there, you see something that doesn't belong to you or something that's incorrect, you need to challenge it right there. They give you a button to click to submit a dispute. They'll take you over to the individual credit bureau to submit your dispute. And once you submit a dispute, the creditor has 30 days to respond. If the creditor does not respond within 30 days, then the credit bureau will update the record to reflect what you said was incorrect. So say if you have something that shows a payment that was late 90 days, and you say, well, that's not true. It was only 30 days. If you challenge that, then the company has to say if it's accurate or not. And if they don't, then the credit bureaus will remove that. And I recently had to challenge something on mine. A lender had not reflected something that's being paid off yet, which impacts your credit score, because if everybody thinks that you still have outstanding credit, your score comes down a bit and somebody may not want to lend to you. So if it takes them too long to do that, you need to get on it and make sure they correct it right away so your credit score can start to increase. And if nothing happens after you submit your dispute, you then can go to, well, there are a couple of places you can go depending on who the creditor is. But you want to start with the Consumer Financial Protection Bureau, CFP.org, CFPB.org. And when you challenge it there, they'll let you know if you need to go to another regulator to challenge it, but that's what you can do. Another way is to make sure you have an outstanding collection that's sitting on there, that's still on there, that's still good. Call those companies and make arrangements. Try to settle it. Try to settle it so it can get off your credit report. The biggest problem I think we have is just fear of what we own. Like if you did it, you need to take care of it. And some people just don't want to deal with it. But if you deal with it, you'll be on the path to making your life a little better. Another thing you want to do is add good data and maintain a good credit history. So what folks were doing, when you go to these credit repair companies and all this, one of the tactics they use is they just find somebody with good credit and put you on their credit by using the social security number, and all of that history of good credit, say they have on a credit card, is going to be attributed to you. And over time, your credit score is going to be pulled up because you have that. And you want to make sure you make your payments on time. When you're making your payments, don't just pay the minimum, because you just pay the minimum, you'll be paying it for a very long time. You want to pay more than your minimum payments and have a great credit history. You don't want to miss payments. That's gonna hit you. You're gonna hit your credit score and bring it down. So make sure those stay on time. You want to limit your credit inquiries. So when you're applying for a mortgage in particular, you can apply up to three mortgage companies within 30 days, and it will only hit your score negatively once. Credit inquiries in terms of how they hit your score and take down from it a few points, maybe 4 to 5 points. And credit inquiries will stay on your report for 2 years. They won't drop off for 2 years. And you have like 9 inquiries. A lender may fear that, wait a minute, you're going to places trying to get credit too much. We can't trust this risk. So that's something to consider too. What's the next slide? All right, so this right here, there are different types. There was one point on there I didn't get to. There are different types of credit too that you should have to help build your credit history. And you want to diversify your types of credits. You may have an auto loan. That's going to help you. You may have a credit card. That's going to help you. And some lenders will take alternative means of credit. Like say if you're making payments on your rent, they may want to see that history to try to establish some credit for you. Or your utilities, they want to use that to establish credit. But student loans, car loans, other mortgages, credit cards are different types of credit they want to see that you've had in the past. And this next slide brings me to I'm not sure if anybody knows. I'll give you guys another chance. Anybody know what scene this is and from what show? Well, this is, I don't see any responses. So
Quiet today.
Say that again.
I said they're quiet. The group is quiet today.
Quiet? Okay, so this is Good Times, and I grew up on Good Times. But maybe I'm older than a lot of folks on the call. Maybe that's what it is. But this is Good Times, and it was based in Chicago, and it was a story about a family that lived in Good Times. Right? Yep. I see it right there. Yep. And this so Good Times, based in Chicago, is about folks who were living in the projects. And I got to tell y'all, I mean, a lot of people don't know about my background or anything, but I was raised on the south side of Chicago in the hood, and I had cousins who lived in projects, and I would go and spend a night in the project sometimes. So Good Times for me was kind of sad because I'm like, they could never make it. It's like they always had something to bring them down, right? And this scene is one of those scenes where James is brought down because he wanted to invest in a business since he was good at fixing things, and he went to the bank to get a loan, and they told him, well, wait a minute, you don't have any credit. And then I remember Florida saying, well, that should be good. He doesn't know anybody any money. You guys should loan him money. They're like, no, you have to have a history of credit in order for us to determine whether or not we're going to loan to you. And I have a cousin who has like a lot of cash, right? And he wanted to get a house, and he called me. And I was going to link him up with a loan officer until I found out he had no credit history. He had not gotten anything on credit ever, but he had all this money. And because of that, they couldn't qualify him. So credit is useful, and you have to use it, and it has to be there for you to move forward on trying to get the financing. All right, next slide. Okay, strategies to pay off debt. The best way to pay off debt is the increased income, of course, to try to pay it off. But for a lot of folks, it's not an option. You got a set amount that you get per month. You're going to budget that amount, and you need to figure out how to get debt down. And I got on here: plan, sacrifice, and execute. If you want to get a plan, you want to prioritize your debt based on the interest rate. So the higher interest rate loans, you want to try to pay down quicker than the lower interest rate loans. And if you're going to sacrifice, when I talk about sacrifices, there are things we spend money on that we want but don't necessarily need. And then we have to have a hard conversation with ourselves sometimes. We're like, I have to let that go and use this money to take care of this debt over here. And when we're able to do that, then you're able to pay down that debt a lot quicker, get in a better financial position than you would have been. And always pay more than what is required. This is, if you got a mortgage, and I know I mentioned it before about credit cards, but even if you have a mortgage, you definitely want to do that even with your mortgage. If you make one additional payment per year on your mortgage, you knock 7 years off of a 30-year amortization schedule. And if you just think about that and you try to continuously pay more towards your mortgage, the goal is to own that home without a mortgage on it. That's the goal. And then, of course, any investment properties you're going to have, same thing. You want to own them in cash. It's always good to leverage debt and use it. Because the interest rate that you're paying on the debt more than likely is going to be a lot less than the income that you're bringing in from what you make, say, on an investment property. But if it's your home and you're sitting there, you definitely want to get rid of that mortgage. Same thing with car notes. The goal is to get it paid off as quickly as possible. One more thing I didn't mention before, but with credit cards, with the credit score, make sure if you have a credit card, say for $3,000, never use more than $1,000 of that $3,000 credit card. And make sure you make those payments monthly, and you'll see your credit score like boom over time. And if you get lump sums, pay down the debt. Again, like I told you guys, I'll just say it, I'm from the hood. And what I would see is people get these refund checks and they go buy a car. Cars are depreciable assets, and they will do nothing for you in terms of your financial picture. I see people get $4,000 or $5,000 back in the day, and I'm just like, that could be used for so much more. Some folks had 4 kids, and they go buy a car. They already got a car. They wanted a better car. Or they could have taken a bus. They wanted a car, and this is about sacrifice again. That $5,000 could have been placed in the 529 plan for that kid to go to school later. I had to get student loans. My family didn't have money to send me to school, so I had to get student loans. Just imagine the difference between us and say a white person who can just go ahead and rely on their parents to give them $10,000, $20,000 to put down on a house or pay for their student tuition throughout college and throughout grad school. That right there creates a huge gap, and it's been that way for a very long time. It's built that way, but I already talked about that. All right, and then, or you can consolidate your debt into a lower interest vehicle. And if you have high interest rates on some debt, smart thing to do, find cheap money. Like if you got cheap money, and I was thinking about the PPP program and the stuff that they have out now for businesses. If you're going to get an SBA loan, say, and it has 1% interest rate, and you're paying down, say, a vehicle with a 3.9 interest rate, it makes sense to at least use that to pay off that vehicle, because even if you have to pay it back, you've won. You've gained 2 percentage points in interest that you otherwise would have paid. Yeah. You go ahead and buy that Tesla. I hope you go live in there too. If you don't have a house, I don't even know who said that. Yeah, if you ain't got a house, you go buy a Tesla. Go ahead. But the last one is the hustle to create additional revenue streams. It's important to have multiple streams of revenue. I'm not sure about our audience. I may just be preaching to the choir here, I'm guessing, but investment property is important in your portfolio to increase income you're bringing in. And when you get that income, your debt level should be where it's manageable, and it's just something to help you. People drive Uber, drive Lyft to make extra money. There are ways to get extra money. These guys will be standing on the corners begging for money. I bet they make a lot of money, probably. I thought about like dressing down and standing on one of these corners instead and trying to collect some money. It's just ways. It's just a testament to how many different ways you can add an additional revenue stream to your portfolio, and then and pay down some debt. And Max just told me about, what is this, Turo, Turo, where you can rent your car out. I didn't even know about that. I'm like, wow, there's so many ways. Next slide. And that's it. And so I got resources on here. I had to pull some of this stuff out. I will send a shout out to the National Association of Black Real Estate Brokers. I'm the local president of Charlotte Crown Black Real Estate Association. And what they do, what the national organization does every year, is they do a report on the state of housing in Black America. And what they show you is the disparities. It's about a 94-page document. And I'll be honest, in the past, I've just glanced over it. I didn't have time to read it. Recently, I read it and I was blown away, because the gaps are not only in housing, but it's on mortgage applications. It's on, it's wealth, of course. It's income. It's all of these different areas. We're behind for a reason. It's not like, it's our fault. It's how do I put this? Most of us on this call, we're trained to work 100 times harder, and we're college educated. We're brilliant, right? We're probably the 10%. You talk about 10%, and you talk about the rest of the population that's just held back and can't and just do what's expected, or just do regular and still can't get ahead and still have that gap. Real briefly, you guys know, like a white guy who's has a conviction has more of a chance of getting a job than a Black guy who's graduated college. But again, I'm preaching to the choir, and that's all I got.
Man, thanks, Brother Hoare. We really appreciate it. I took down a good number of notes here for myself. So good knowledge here. Any questions for Brother Hoare before we transition over to Brother Bowen? All right, great. We'll go ahead and transition. If you'll give me a second to pull up the slide deck. All right, Brother Bowen, the floor is yours. Brother Bowen, you're muted.
Myself. Okay, there we go. Got myself unmuted. Hey, good evening, brothers, and also want to thank Brother Hawkins and Brother Macon for putting on these financial awareness seminars and so forth. And today I'm going to take you through the home buying process, and then at the end we also talk about the selling process. Just to let you know a little bit about my background in real estate. I've been practicing real estate since 2001, so been in the game for a little bit over 19 years. I'm a broker with Keller Williams Realty, and my office is located in the university area. Next slide there, please. So the first thing that you want to do when you're interested in purchasing your home is that you want to partner with a realtor. And that realtor, of course, could be myself. And one of the things that we're going to do is we're going to sit down and we're going to do an analysis and talk about the types of things that you're actually looking for in a home. That could be the number of bedrooms, number of bathrooms, how many square feet that you may be interested in, as well as any other things that are important to you. I'll give you information on, the market conditions, as well as the number of inventory homes that's currently in the market. We also, as a realtor, can do new construction as well as existing construction. And I also want to encourage you that I know a lot of people like to go and look at new construction, but make sure that you have a realtor with you when you do go look at new construction, because the people that are working there in the office for the builder, they're actually representatives of the builder. And you want to be careful about the amount of information that you give to the seller side. Next slide there, Brother Macon. And the next step, and really the major step that you want to take in getting ready to purchase your home, is actually to get pre-approved for your mortgage loan. And by getting pre-approved for your mortgage loan, you actually get the opportunity to understand what your overall purchasing power is. So let's say, for instance, you may qualify for $1 million home, but you may not necessarily want to spend all of that $1 million to purchase your home. You may only want to spend $300,000. You may want to spend $500,000, but at least you know exactly how much you can actually spend when you want to buy that home. And one of the main things that you want to be concerned about and have is your down payment. And your down payment can run anywhere from 3% to 20% of the purchase price. And you can even pay more on your down payment as well. But if you pay at least that 20%, when you pay that 20%, you can get rid of something that's called private mortgage insurance. And by getting rid of that private mortgage insurance, that'll be less amount of your monthly payment that you have to pay each month. And then the other component of that is you have closing costs. And your closing costs can be anywhere from 3 to 3.5% of the purchase price. And the closing cost is going to cover things like your appraisal, the loan costs, and various things that the lenders require that you pay. It also will cover your attorney fees as well. And when you're going through the process of getting your pre-approval, you want to also let the lender know what is your monthly payment that you actually want to have. So for instance, if you want to monthly payment of $1,500, the lender's going to probably give you a pre-approval letter just based off that $1,500, or they give you a pre-approval based off of that $2,000 that you may be interested in. Next slide, Brother Macon. And just some things that you need to get together in order to prepare for the loan when you complete the mortgage application is that you want to have at least 30 days of your most recent pay stubs. The lender's going to want to see a copy of federal tax returns. They always want to see a copy of W-2s for the last 2 years. You want to get together your bank statements because the lender wants to see what kind of monies you have coming in and out of your bank account. They also want to know where you actually lived for the past few years, as well as where you worked for the past couple of years as well. If you're paying child support, they'll ask you for that information as well, because they want to see what kind of debt that you may have. And if you've been into bankruptcy, or if you had a previous foreclosure, that doesn't stop you from actually purchasing a home or anything like that. You just have to be out of that bankruptcy or foreclosure anywhere from 2 to 3 years. It just kind of varies depending upon the type of bankruptcy that you may have had. But you can still maybe even get a regular FHA loan, a VA loan, or a conventional loan. Next slide there, Brother Macon. And some other documents that you want to have, and things that you need to prepare for. There's a lot of times that the lender is going to ask you to explain some of the information that comes up in your report. And they may look on your bank statement to see that you may have a large sum of money that came in. So they may want you to explain that information. But where did you actually get that large sum of money? They just want to make sure, hey, that you're not actually laundering any money or anything like that. And as far as the business owners, you're going to have to provide like your profit and loss statements, your taxes, because the bank wants to see that you have enough money coming in so that you'll be able to pay that mortgage note at the time the mortgage is due. Next slide. Some of the loan products that we have is FHA, conventional, VA, as well as USDA. Like you're going to do an FHA, like Brother Hoare mentioned earlier. FHA is going to require that you put 3.5% down. Conventional loans, you can do anywhere from as low as 3%, because there are products out there where you can actually get a conventional loan for 3% down. And then on VA, for VA loans, that's the Veteran Administration. You can actually do 100% financing on those types of loans, as well as you have to go get a VA eligibility certificate for that loan. And then when you're doing the USDA loans, those are types of loans that are for people who are living in a rural area, or that property you may want to purchase. For instance, we have some areas that are in and around Charlotte that are in Mecklenburg County, believe it or not, that are classified as USDA homes and are classified as rural areas. And then on the USDA, you can also get 100% financing. Next slide, Brother Macon. And down payment assistance programs, a lot of times for first-time home buyers, they're looking for some type of down payment assistance. Some of the programs that are out there, one of the major ones and main ones that we use is North Carolina Housing Financing Agencies. And with North Carolina Housing Financing Agencies, you can get up to $8,000 in one of their programs to use for down payment assistance, as well as towards your closing costs. And then they also have another program where you can get at least 3% or 5% in down payment assistance. And each time you get some of this various types of assistance from these programs, you may end up or will end up paying a little bit higher interest rate. And we have the House Charlotte Grant Program. And a lot of people think that the House Charlotte Grant Program is for people who may be living in neighborhoods that are a little bit disadvantaged and run down. But the entire city of Charlotte is part of the House Charlotte Grant Program. And depending upon what your income level is, number of people that are living in your household, in your situation, you can get anywhere from $5,000 to $17,000 in a House Charlotte grant. And that grant is actually forgivable. And also one thing about the North Carolina Housing Financing Agency too, the maximum income that you can get need to have is, in order to qualify for that program, is $92,000. And then we have NACA, where NACA offers a program as well, where there's no down payment, no closing costs, no PMI, and it's a very good program as well. Neighborhood Lifts is sponsored by Wells Fargo, where you can get up to $15,000 towards your down payment. And then you have the Home for Heroes. Home for Heroes are people who are like teachers, firemen, police officers, and there are grant programs out there for you as well. And then we have the Bank of America First Time Home Buyer Program, where Bank of America gives borrowers up to $7,500 towards their down payment assistance program. I saw a comment come across. Did anybody have a question? Perfect. We can go out and have a drink anytime. Just let us know. But please feel free to follow up. I see a comment. Okay, how can the Black people get a Cool. Okay. Next slide too, Brother Macon. There are also some housing counseling agencies out there. And a lot of times I may recommend some of my clients go to a housing counseling agency. And the reason why they want to go to a housing counseling agency is that housing counseling agency is going to help you get mortgage ready. And they're going to do a lot of things that Brother Howard talked about earlier. They're going to help you budget, going to make sure that you, if you have some credit score issues, they're going to help you raise your credit score and so forth. And just help you understand what your overall purchasing power is when you're ready to buy that home. And some of the more popular ones that I work with is Prosperity Unlimited, NACA, the Charlotte Mecklenburg Housing Partnership, as well as Community Links. And a lot of these counseling agencies, when you're getting down payment assistance, you have to go to them and do a 8-hour class to show that you've been through the process and that you understand the overall value of owning a home. Next slide.
There is sorry, before you get into this next slide, apologize for interrupting Brother Bowen. There's a question about investment properties. So we won't do a deep dive into that during this session, but we'll talk a lot more about that in the 4th session. That'll be next month. We'll have some experts there to talk about different investment properties, commercial, and like flipping homes, things like that. So more detail there on the next session in April. Apologize,
Yes.
Brother Bowen. Go ahead.
Oh, thank you, Brother Macon. Yeah, that's all planned to be there because that's going to be a great session on investment properties as well as on commercial properties too. So good. So now we're at the step where you're ready to go out and find your new home, but that's after you have obtained your pre-approval letter from the lender. So based off of all of that stuff that we talked about earlier, the lender's going to go through that analysis and then they're going to issue you a pre-approval letter. Now, once you get that pre-approval letter, then you're ready to go. We're ready to go out and take a look at home. We're actually physically ready to go out and take a look at homes because prior to this time, I may have set you up on a campaign where you just got information about some listings as homes come on the market. You get an idea of what homes are actually out there. But once you get that pre-approval letter, then we'll get together. You'll let me know what homes you actually want to see, and then we'll schedule some home tours, and we'll go out and take a look at the home. And hopefully within that first day that we go out, you're actually going to find a home that you actually want to purchase. And then once you find a home that you actually want to purchase, then we'll go through the process of writing up the offer. Next slide. So this is the process, like I said before, that we start the process of writing up that offer to purchase and contract. And just some of the components and things that are going to be in the offer to purchase and contract, which is very key, is that you're going to have to put down earnest money deposit as well as a due diligence fee. And what the earnest money deposit is, it is money, good faith money that you put down so that show that you're actually serious about purchasing this home. And then you have a due diligence fee that you also put down. And that due diligence fee is monies that you use to buy a period of time to do all of your property investigations. That's to get your final loan approval, to do your inspections, to review documents, to get your survey and everything done. Now, as far as this money, the earnest money deposit is refundable back to you. However, that due diligence fee is written out to the seller. That money is not refundable back to you. It's again the fee that you pay to the seller to do your property investigation. And during that due diligence period, you have the option to walk away from the contract if you find something that you don't like about that home or some situation come up. And it doesn't have to be any major reason or anything. You can just wake up one day and say, hey, I don't want to purchase this home. Now, you will get your earnest money deposit back as long as we cancel the contract within that due diligence period. However, this earnest money deposit and the due diligence fee is credited to you if you continue on with the purchase of the home. There'll be property disclosures that the seller will provide. We'll get that information from the seller. And what those property disclosures are is the seller's going to let us know if there are any issues with the house, defects or problems with the house at the time that they actually put it on the market. And a lot of things in that property disclosure is going to tell us what's the age of the roof, what type of plumbing is in the home, how old is your HVAC system, and so forth. What type of water system is it on? Is it on city water, city sewer? It also talks about what's in the HOA, what things the HOA is going to cover. And then a lot of times, a buyer, when we visit homes, they may want to access some of the seller's personal property. And the personal property are things that we actually have to include in the contract. Personal property are things such as a refrigerator, washer, dryer. Those are the most common ones that a buyer will ask for. We also include in there the type of financing that you're going to get. And it could be one of those FHA, VA, conventional, or USDA that we talked about earlier. However, if you're one of those buyers that's just got deep pockets and you want to make a cash offer, that's always much better than getting a loan, because when you do cash, it's an easy process. The seller doesn't have to be concerned about the lender rejecting your loan. And then you can also ask for the seller to pay some of your closing costs. And a lot of buyers do ask for that. But I would tell you, in this market that we're currently in today, there are many buyers that are out there that are not asking any seller paid closing costs. Next slide. The other thing, we always ask the seller to cover your home warranties. Then we choose a closing attorney. And of course, the closing attorney that I use is Brother Horde. So that's why I put this name right there beside it, because Brother Horde and I have been doing real estate closings together for pretty much since he's been here in North Carolina, when he moved in from Chicago. We also going to select a date that you actually want to close on the home. And typically, we try to close on the home within 30 to 45 days. And of course, the quicker you can close that home, the much more competitive it looks for your offer to the seller. And once we write up the offer, it's submitted over to the seller's agent, and they submit it over to the seller. And the seller may look at the offer and say, hey, this is a great offer, but they may want to offer a counter back on some of the things. So they may want to counter back on a much higher price than what we actually offered it for it. And then we'll go through a negotiation process. But once everybody can come to an agreement on that offer, then we'll actually end up going under contract. But in today's market, when we write up offers and stuff, because of the low inventory that we have, you want to probably be going to ask for at least right in the offer, whatever the seller's listed it for, that might be the price that you want to go in for, because we're finding this market here with the seller's market, there are a lot of people that are offering more than the list price for that home. And of course, when we in this process here, you definitely want to stay in close contact with me as your agent to make sure that you're being up to date and asking any questions that you may have during this particular process. Next slide. Once we go under contract, then there are a lot of things that will be happening in parallel. There's a lot of people who are going to be working behind the scenes to try to make this here process as easily and less emotional for you as possible. I always tell my clients that purchasing real estate can be one of the most exciting things, but it's also going to be one of the most emotional things that you ever go through in your life, because there's just so many different components that are going to be happening at one particular time. But once we go into contract, I'll contact Brother Horde. I'll schedule the closing based off the closing date that we actually put in the offer to purchase contract. We'll set up the home inspections, and the major home inspections that we're always going to have. If you don't do any of these home inspections, and you have to sign your name to me in blood saying, hey, that you refuse to have these done. But you want to have definitely want to have your home inspection. You want to have the termite inspection, and you want to have an HVAC inspection, because a lot of times when we go in these houses, we're going to look at the houses, and we're not going to be able to see everything that is actually may have an issue with that home. But when we hire these inspectors, they'll go in and do a much more detailed, thorough analysis. And once they complete their report, They'll give us that report, give that report to me, then I'll give it to you. Then we'll go back through the process, look at what items in that report that we actually want the seller to repair. And let's say, for an example, that if there are 10 items that we want the seller to repair, then I'll write up a due diligence repair request, submit that over to the seller's agent, and they'll give it to the seller. And then the seller may come back and say, hey, I only want to repair at least 5 of those items. And then we may be in a process that we have to negotiate at least the repair items and come to an agreement on the repairs. And if at some point, if buyer and seller can't come to an agreement on the repairs, then that contract can actually die. And at that particular time, any monies that you paid up front, you end up losing those monies. But while we're going through the process, you also want to be working with your insurance company to get insurance on the home. I always recommend people to go to an insurance company that you have your car insurance with, because that insurance company will bundle your insurance and offer you a discount for your car as well as the home. You get an appraisal done. The lender's going to order your appraisal. And the other biggest part of this whole process of getting your final loan approval is just going to go through underwriting. And the underwriter may come back with a lot of different conditions and other things that you may need to satisfy. And as long as we satisfy those contingencies and things that the underwriter put in place, then you end up getting your final loan approval. Next slide. Was there a question that came across? Is the process the same when doing a new construction? Overall, the process is still outlined theoretically pretty much the same. However, we just deal with the builders, and a lot of it's done differently. You can have inspections done on new construction as well. So in general, yes, and we do walkthroughs with the new construction and new construction supervisor, because I just did one with a client a couple of weeks ago, and we did our pre-drywall inspection. And doing that pre-drywall inspection, we found where the new construction builder had put in a lot of bad wood. So we went in and I told him, you got to replace this wood on the deck, and it was very obvious. And a lot of times these framers and these new construction builders, they miss a lot of stuff, or they just try to cover up some things. So with my knowledge and my skills, I can help you identify those things too. Next slide. Just to give you an idea of what some of your upfront costs, because you do have a lot of upfront costs when you are purchasing your home. Like I said, you do have your earnest money deposit. That can be anywhere from 0.5% to 5% of the purchase price. Your due diligence fee can be $500 up to $5,000. In this market here, I've heard of situations where some people have put down $25,000 for their due diligence fee. And the reason why a lot of people put down a much higher due diligence fee is because they may have been out looking for a home for quite some time. They've written 10 offers and got rejected on their offers didn't get accepted each of those 10 times. And that's because, you know, the competitive market nature of this home, of this market that we're in, with a lot of buyers out there trying to buy a limited supply of home. Your home inspection estimated cost is going to be about $500. Termite inspection is going to be about $85. HVAC inspections are $95. We also have to do appraisal. That appraisal money that you pay directly to the lender, that fee is going to be about $525. If you want to do a survey on your property, and I always recommend to my clients to get a survey so you know where your property lines are going to be, that cost can be about $500. And then you also want to get a home warranty, and that home warranty is going to be paid at closing. But all the other fees that I've mentioned, the home inspection, termite, HVAC, appraisal, and survey, you pay those up front to the contractor or to the vendor who's actually performing those services. And if for some reason that the contract falls through, you don't close on the deal, those are just monies that you're going to, that's just going to be the cost of doing business. Those are money that you will not get back. Next slide. And while we're still under contract, one of the things that's very important is that we track all the dates and make sure that we meet our dates, our due diligence period and end dates, make sure that we're closing on time. because we don't want any issues to come up and missing dates that the seller may not necessarily give us an extension to extending these dates. A lot of times, and all the times, if we come up close on end date, then I always go back and ask for an extension and hope that the seller will agree. And then the other item is the attorney will conduct a title search and obtain title insurance. And that's what Brother Hord will be doing. He's also will be working with the lender to get your loan documents, to prepare your settlement statement, and so forth. So there's a lot of magic that goes on in his office that I just let him handle and take care of for you. And then, like I said, you get your final loan approval. And then once you get your final loan approval, the lender takes you through a process. And what we all want to hear, the lender takes you through a quality approval process to make sure everything is correct. And then what we always want to hear is those 3 magic words, clear to close. Once you get that clear to close, we pretty much know that, hey, you're ready to close, and we're going to go see Brother Hart so you can sign all your loan documents. And then you also want to just check and make sure and certify that you have the funds that are available still for closing, because some of you sometimes people start out, they have all their funds available. They say, hey, I'm going to purchase this house. I'm going to go out and buy some furniture and so forth. Don't go buy no furniture. Don't go spend anything on your credit card, because those are monies that, hey, you needed to buy that home, or it may mess up your debt to income ratio or something like that. And then you're going to be out. You won't end up being able to close on that home. And again, you're going to stay in close contact with me as well as Brother Hart during this process. Next slide. Before you close, these are some other items that we would do. We're going to get a final closing disclosure from the lender as well as from the attorney. And once we get that closing disclosure, we're just going to go through it and make sure that all the monies and all the documents and all the numbers are correct. And at that time, they're going to let you know how much money you need to actually bring to closing to finish closing on your deal. And you may have some funds that you need to transfer from like an R or A. So you want to make sure that you do those transfer those funds well in advance. And just some other key things that you want to do. Set up your moving date. If you're getting a moving company, make sure you contact them. Make sure you change your addresses, as well as make sure you contact the utility companies and connect the water, gas, and electricity in your name. And we'll also make sure that there's any other contingency or anything that needs to be resolved, that we'll get those done before you go to closing. And typically on the day of closing, maybe that morning, if we're going to close in that afternoon, we'll do a final walkthrough to make sure that that house is in the same condition that it was the last time we visited. Because one of the things we don't want to do, especially like in the wintertime, go to closing, and then after we close on the home, you go back to the home and find out that the water pipe is burst and you got a major issue to deal with, or that somebody came through and threw a rock in the window and the windows burst and things of that nature. So the other thing is just make sure you keep all your details, and again, stay in contact with myself, your lender, as well as Brother Hart. Any questions? Excuse me, next slide, before, as well as any questions too. On the closing date, this is the stuff you want to do. You contact your lender as well as you contact the attorney to wire any of the funds. And before you wire any funds from anybody, because especially in this environment where there's a lot of scams, you want to call the attorney's office. So you will call Brother Hart's office. You'll verify the wire instructions, and he'll talk to you and make sure the account numbers are the same. And then once you talk to him or his assistants and verify those numbers on the wire instruction, then and only then, and I stress then and only then, that you wire those monies over to the attorney's office. Because like I said, there's a lot of scams out there, and you might find out that if you didn't verify your wiring instructions, that your money is in China or somewhere, or Russia, and you can't get it back. It's going to be hard. And always bring your photo ID. Next slide. And on closing date, that's the date when you go to Brother Hart's office and you sign all your closing documents. Typically, that process is going to take about 30 to 45 minutes on the average. And then after you sign all the closing documents, he's going to record the deed. And then once the deed is recorded, you'll be able to get your keys. And then after you get your keys, congratulations, brothers. You're a new homeowner. Next slide. So any questions on anything as regards to the home buying process?
Hey, brother, I got something.
Sure.
I was just going to say that there's a higher percentage of Black folks who get FHA loans, and that's higher than any other group. And that increased the cost of the loan. So mortgage insurance is a cost that you have to pay. Conventional loans, if you're getting 20%, a conventional loan, and you got to put down 20%, then you're saving that mortgage insurance cost completely, which makes it a cheaper loan for you to get into. Sad thing is that people who really can't afford it ends up paying more to get into loans than people who can't afford it. So I would encourage brothers to put 20% down if you can. Try to go that route. Just create that instant equity and get into a home, lower the cost.
Okay.
So along those lines, I've got a question. So for those that did go through and get the FHA loan and have the PMI insurance attached to their mortgage, is there a way to get out of that, right? So what if you're in a better position or you own enough equity in your home to where you won't need it? How do you get out of that if you can?
The best thing to do is contact the mortgage company you can contact the mortgage company that you got your loan from, or you can contact another mortgage company, and they will go through a process and see if you got at least 20% equity in your home. So you end up getting your home refinanced. And if you're able to get your home refinanced, then you can reduce and get rid of and eliminate that mortgage insurance. Anything you add, Brother Howard?
Yeah, so FHA loans, the mortgage insurance stays on for the life of the loan. So you have to refinance out of it to get rid of it. If it's a conventional loan, you have mortgage insurance on there. Usually, you can contact the lender. Of course, you contact Brother Bowen as your broker to find out what your value is and make sure you have that value where the new loan will represent 80% or less of the value of the home. You can request in writing that they remove the mortgage insurance. You have to pay for the appraisal and be current on your payments. And once they do their analysis, they'll remove it for you in the space of a conventional loan.
Okay. And one of the things that just came across in the chat is about taxes and how that can affect you. I'm not a tax expert, and I leave that up to the tax people, but I'll give you some kind of the highlight stuff as well. But when you have a loan, there's interest, and you're able to take that interest and write it off on your taxes, and that can reduce the amount of money and liabilities that you owe to the government, and you may end up getting a bigger refund. It also can help you with having enough, money to write off so that you'll be able to get your refund. But now with I think most people, and Brother Hawkins, you can kind of correct me because this is more your area as well. Now with that $12,000, standard deduction, if you got interest that's over $12,000, then you'll be able to start writing stuff off. But typically, if you're interested in all your other charitable contributions, your state contributions and stuff are less than $12,000, then you generally take the standard deduction. There's also something called for the North Carolina Housing. I'm glad you asked a question that I did mention that North Carolina Housing Financing Agency offer for first-time home buyers is the MCC. It's called the Mortgage Certificate Credit. And with that mortgage certificate credit, it's basically a one-for-one write-off on your taxes of your tax liability. So if you got a mortgage certificate credit for $2,000 and you owe $4,000 in taxes, then you get to write off $2,000 of that, and you only have to pay the government $2,000.
Yeah, that's correct. Brother Boeing, exactly what you actually said. Most people today, about 10% of individuals itemize now because of the doubling of the standard deduction there. So a lot of individuals with the interest on their home, is sometimes not enough to help a person to be able to itemize. But that MCC credit, it is a credit. It is dollar for dollar. But one of the things that I see a lot that's affecting people with getting loans as far as taxes is because they may have a tax bill. They may owe taxes, and they have to be on an installment agreement with the Internal Revenue Service. And, that agreement can go against your debt to income ratio, as you guys actually talked about, that they need to actually basically do that. And if you're one that, especially if you're a self-employed individual and you want to use that income, you need to be careful, because a lot of times you want to write off a lot of things. And only certain things can be added back to your income to say that you have some type of gross income to help that debt to income ratio. Things like your miles can be added back in, depreciation can be added back in, half of your meals can be added back in. So you definitely need to look at both of those pictures. You can get a home, but you need to possibly be on an installment agreement and put that into your debt to income ratio. Now, the installment agreement, guys, mortgage company want to have that for like 3 months, showing that you have an installment agreement for 3 months. So if you owe taxes or hadn't filed your tax return, you need to get that actually done. Allow yourself a lot of time to make sure that you're doing it the right way with an installment agreement, so they can use that with your debt to income ratio.
Great. Any other questions as far as the home buying process? If not, I guess the next slide, Brother Macon, we talk about the home selling process, and just take a few minutes here to give you a few tips and things about if you're interested in selling your home. I would say for anybody who has a home that they want to sell, this is a great time to sell your home. I'm seeing a lot of sellers walking away with, they have at least $100,000 plus in equity in your home. So if you have some plans that you need some money, you want to move somewhere else, or you want to buy another home, you can definitely use that money to help go towards the purchase of your home. So Brother Macon, if you can make the next slide, that slide there a little bit larger. So what happens basically is that we have the initial meeting. I'll meet with you, come to your home. We'll do a walkthrough, and I'll talk to you about some things that you need to do to get your home prepared for sale. And one of the biggest issues that I find with a lot of people when I do this walkthrough is that the number one thing I tell people is start decluttering your home. Start moving, packing things up, because if you lived in your home for such a long time, that you've got a lot of stuff that's in your home. So you definitely want to start decluttering your home. You want to get your home in showing condition. And I always say get it in model showing condition. So if you ever been out to new construction, you've seen what the model look like, try to get your home in that kind of condition. You may also need to paint. So it's always good to do some good neutral painting on the home. You want to have great curb appeal, fix up the flowers and things like that in your home. Make sure it looks very good and presentable to the buyers who are actually interested in purchasing your home. Because when you do all of this stuff, you want to make sure it helps you get a good price on the home. You don't find somebody coming in trying to lowball you. And then one of the other things I do is I do a market analysis on you on your home, and that's definitely going to help you determine what price you want to sell your home at. And generally, that market analysis is going to be based off of at least 3 or 4 homes that have sold in the area very recently. And the other key thing is that you're doing a seller estimated net sheet. That net sheet is very important because it'll give you an idea of how much money you're going to walk away with at the time that you sell your home. And a couple of things that I need to do that estimated seller net sheet is I want to know what your current mortgage balance is, and I want to know at least what your current monthly payment is on the home. That'll help me with providing you information on that seller net sheet. Like I said earlier, hey, you might be one of those sellers who have that $100,000 in equity that you'd be able to walk away with at the time we close on your home. And once we get all that information, you're ready to go put your home on the market. There's a listing agreement. There's a lot of contracts, and a lot of documents that we'll go through. I'll go through those documents with you and explain all that information to you. But once you sign your listing agreement, then we'll go out and I'll hire a professional photographer to come out and take pictures of your home, because we want to make sure that your home looks very good on the internet, because a lot of people are doing a lot of home shopping on the internet even before they even contact an agent. So we want to put your home in the best position as possible. And then once the home is on the market, again, I start marketing your property, marketing it out to as many buyers as possible out there, marketing it out to other agents. We may even have an open house where we have people come through and take a look at your home. I went to some home open houses recently with some of my buyers. And I tell you, like I said earlier, we're in a very competitive market here. And you may have 20, 30 people out there looking at that one particular house. And then you may end up having, that seller may end up having, on average, 10 offers on their house. And a lot of times those offers are above list price. Buyers aren't asking for closing costs. Some of them not even asking for home warranties, and they're giving a high due diligence fee as well as earnest money deposit. Next slide. Once we get the offers back, that's when I get with the seller, and then I present the offers over to them and so forth. And we decide on which offer that we want to select and everything. Then your house is under contract, and after you've decided on which buyer that you actually want to go with. And once we get the buyer who wants to buy your home, the buyer is going to be doing all those things that we talked about early in the buyer presentation in regards to the inspections and so forth. So everything we talked about for you on the buying side, that's what the buyer is now going to be doing for that particular seller on the seller side. And like I said, if there's any other issues and things, we'll work to remove those issues. The buyer again is going to order an appraisal on your home and so forth, and the buyer is going to make sure that the home is actually going to appraise for the amount that you're actually purchasing it for. In this market here today, where some buyers are offering more than list price and sometimes more than appraised value, some sellers are coming back having them sign some addendum and say, hey, if this house appraised more than what you actually want to purchase for, let's say if it appraises $500,000, but you offer $525,000, then you, Mr. Buyer, are going to be responsible for bringing that $25,000 to the closing table, along with your earnest money deposit, as well as your other closing costs. And before we, the buyer is also going to do a final walkthrough on their home as well. So any questions or anything? Someone asked the question, does anyone know what the HELOC rate environment is like right now, and can funds from a HELOC be used towards the purchase of an investment property? Again, on investment properties, I would say that, we're going to go into more detail on investment properties at the next meeting, but you also want to be careful about if you're going out borrowing additional funds, because that is like money that you're actually borrowing from your lender. And that could go against your debt to debt to income ratio.
If I could also comment, so you can definitely use the HELOC for purchases of investment property. And the rates of, if you're going to get a HELOC on your primary residence, I think the rate's probably like, I'm just Googling this, but 2% up to 4% for the HELOCs. And you can pull that and then use it for investment property. I was actually considering doing that at one point. But for some reason, I can't remember, but I didn't want it to, that's right, I didn't want it to impact my DTIs because I still had not refinanced. So number one thing for me was to refinance out of my old higher interest rate into the lower interest rates. Interest rates are historically low. They were at 2.5 to 3% refinancing. So as Maxfield pointed out, those if you do that, that's going to go towards your DTIs and could throw you out for refinance. Even if you think you make plenty of money to make your mortgage payment, it could knock you out of the box.
Next slide. That may be okay. That's the last slide. So, is there any questions? Anybody else got any other questions that you want to ask? You can always feel free to contact me. My contact information, which was on the first slide. My phone number is 704-953-4062. My email address is maxfieldrealestate@yahoo.com. Feel free to call me at any time, and I'll be happy to answer your questions that you may have. Also, you can contact Brother Howard as well. We, again, both work hand in hand to try to make this process as easy and smooth for you as possible.
You just volunteered me up right there.
Sure enough. But you know, I call you all the time. You know, in this process, I mean, you know, you have a realtor, but then as a realtor, we have a lot of people that are on our team, and Brother Hart, as the attorney, is one of the people that's on my team, as well as the home inspectors that I use, as well as the lenders that I use to help you get pre-approved. And all of that stuff generally comes through me. And regardless of whatever they tell you, everybody always calls me to help me explain that to you, to answer any questions for you, and so forth. And then sometimes we may have to reach out to a tax person. And if there's a tax question, I always recommend that you contact your CPA or a tax person. So that's where Brother Hawkins would come in. So he's part of our team too. There's a lot of people that's part of the team that you actually don't see. There could be about 20, 30 people working on just trying to get you into a house.
Can I echo? I want to echo that for Brother Bowen, right? I was joking, of course, earlier. Brother, feel free to contact me if you have any questions. But just a testimony about Brother Bowen. He helped me get in my first investment property here. That was 45 years ago, about 5 years ago.
4 or 5, yes.
4 or 5 years, and you guys know what's going on in Charlotte right now. The equity in it now is just crazy. The only thing I'm upset with him about is he told me about more than one. We all good.
We should have got a few more back there, bro. Hard. We sure do. But if you also know about the people that are on my team, my attorney that we use is a brother. My home inspector that we use is a brother. One of the loan officers that we use is a brother too. So mostly everybody is on my team who's helping you buy a home is Black. So, you know, we try to keep the business within the family.
That's right. And if you ain't gonna support us, just find somebody that's Black. If it's not
Right.
out, make sure they Black at least for you for outside.
Exactly. So that's it. Thank you, Brother Macon and Brother Hawkins for setting us up. I appreciate the presentation, Brother Howard, too.
Absolutely, and thank you both, brothers, for your sharing your wisdom and knowledge and for this phenomenal presentation. I know that brothers, including myself, have taken a lot away from it. So we really appreciate that. Doesn't look like there are any additional questions in the chat. So again, thanks to you, brothers, for joining us today. The next session, I think, will be highly attended. April 17th, the third Saturday within April. Will be all about real estate 101. So more about investment properties, flipping homes, commercial properties, all sorts of information like that. So you're interested in that, join us next month, same time, same place. We'll have some experts here to talk to the Brotherhood about that. So with that, again, thanks to Brother Hawkins, as usual, for setting us up and making sure the technology is all good and working straight. So we appreciate you. If nothing else, we'll see you all soon. Thanks, brothers. 06.